good morning. You're watching The Market right here on ET Now with me, Ayesha, Faridi. I've got Anisha, Jain, as well as Avanne, Dubash in the studios. And ladies, not Mumbai, but seems like all of the country was rained in.
I know, right? The level of rains in North India was like crazy. I've heard the instances from people in Delhi, etc. Completely waterlogged.
Yeah, and schools and everything have been closed due to that.
Absolutely. Yeah. And in fact, I don't recall the last time Mumbai and Delhi had rains at the same time. Forget anything else. And that's really the rain at its fury all over from Uttarakhand all the way to Kerala. It's been rained in, and I can see snippets from J&K as well coming in there. So, yep, that deficit that we had because of the onset of the delay in monsoons, that's clearly made up, and I think it's now in excess.
Yep. Yes, in a matter of 2 days, it's went from a 10% deficit to surplus now. And yeah, it's getting a bit scary actually in Uttarakhand as well as Himachal, because there have been multiple warnings that have been issued. Delhi had the highest single-day rain since 1982.
In the last 40 years. That's crazy. And it's clearly brought the country to its knees. We can see some of those visuals as well. There's waterlogged roads, flooded homes, as well as a lot of houses that have collapsed, uprooted trees, cave-ins, etc. So clearly there's a lot of fury being unleashed.
Absolutely, and the fury was unleashed for the markets as well. For the better, though, we managed to clock that 19,500 print for the Nifty, and then from there we receded a little bit as well. That, of course, is the Friday picture, but over the week, a graph will give you a better sense of how the week gone by was. So yes, we managed to snap our 8-day gaining streak, but that's only the Friday price action. The week, of course, was that of historic highs. So from that 19,500 mark, we've receded a little bit, as we are hoping that the flood situation across the country also would. But yeah, PSU banks, they are the ones which have been doing the magic. Autos, we all know how, we've been scaling higher on the Nifty Auto Index, and how some of the key constituents from within the auto pack have been some of the biggest movers in the week gone by, and have also had historic highs for themselves. But I think the question is whether in the near term we've hit a bit of a ceiling or not for us. Looking at the global temperament, that seems to be the case, because remember, even in the week gone by, many a days when our markets managed to clock fresh highs, the global markets weren't all that supportive. So yes, could we fall a little bit from here? Sure we can, as we did on Friday in the week gone by itself. But is that anything alarming or unhealthy? Purely not. In fact, if nothing, with the kind of speed that we've actually clocked in all the way to that 19,500 mark, maybe to catch a little bit of breather is only a healthy sign. Right, Anisha?
Oh, well, yes, and the point that you were talking about, the Indian market versus the global markets, because we have showed massive outperformance in the week gone by, while the likes of the European markets were down anywhere between 3 to 4%. The US markets were down last week 1 to 2%, but the Indian markets, they managed to clock gains of around 0.7%, and hopefully that will continue this week as well. The Nifty for now is suggesting we are likely to open with a gain of almost 50 points. There you have it. It's only the Indian markets which are showing a bit of a tinge of green in the week gone by versus the rest of the globe. But yes, the clues from Friday aren't that impressive. The jobs data came by. Well, the actual number of jobs was actually cooler than what the street expected. So it wasn't a red hot data that we got from the jobs report. But what was actually worrying was the fact that the wage inflation number has gone up. And that's the reason the market slipped quite a bit when it comes to the US market, 0.5% cut, etc. coming in for the Dow as well. And that set against the cat amongst the pigeons, saying that again there will be a rate hike that might be needed. Not just that, we saw a big reaction coming in when it comes to the world of commodities is concerned as well. The crude prices spiked 3 to 4% overnight. In fact, crude is now again around that $78 per barrel mark. So we are watching out for that, because that will be important to track. The bond yields have been fairly volatile. The US 10-year continues to be above the mark of 4%, and the dollar too has been around that 103 mark. So watching out for a lot of these indicators. But yes, this morning Asian markets have started in the green. China's June inflation data has also managed to miss the expectation. So maybe that entire monster of inflation is, at least for now, ebbing a bit, and that is an important cue that we're watching out for this week as well, Avanne, because we'll get the Indian CPI data this week.
Absolutely. So it's a very hectic week on the macro front. We'll also be anticipating a lot of data coming in across the board, and that's what the markets really will be watching out for. So let me spell it out for our viewers as well as to what are going to be some of the important talking points or key data points that the markets will react to. You've got numbers that will be coming in. So corporate earnings for the quarter ending June FY24, that is going to kick in. And of course, it will be kicked off by the IT majors, TCS and HCL Technologies in exactly 2 days from now. So the street will keenly be watching out for that, as they will be the first to declare their numbers. You're going to have Wipro as well on the 13th of July that will be coming out with its numbers. The likes of Bandhan Bank, JSW Energy, Federal Bank as well, etc. will be coming out with their numbers along with an Avenue Supermart. So that is something that we'll be watching out for. The expectation is that maybe there could be some positive earnings momentum. But other than that, yes, the CPI print back home along with IIP, that is going to be declared on the 12th of July as well. Remember, it was flat in the month of July at about 4.3%, the CPI inflation. Food prices, though, have been going and trending higher. So that as well is going to be keenly monitored. As you said, Anisha, we will also be looking out for the global front. Market participants will be watching for the US inflation print. You've also got the last day to buy HDFC shares. This is on the 12th of July. So that is going to be critically monitored ahead of the merger of the two financial behemoths. And then you've got the monsoon. We're tracking all the latest developments there as it's moved to a surplus, as we were just discussing, from a 10% deficit. So that is something as well that will be watched out for. And it's going to be super hectic when it comes to the primary markets, because we've got not one, not two, but you've got 4 IPOs that will be opening for subscription. And actually, there are going to be 6 companies that will be making their debut in just the next 5 days. So that is what we'll be watching out for very closely. Yes, signed DLM will be closely watched out for. It's set to make its market debut today. And remember, the issue price is at about 265 rupees per share. So we'll be closely watching out for that. And then, of course, Ayesha, a slew of others, Utkarsh Small Finance Bank that we'll be looking at, and some of the others like Asenco, Gold, etc. will be closely watched for.
Oh, yeah, absolutely. And of course, Jio Financials or Reliance Retail also, that's another company which is going to be in focus. Look out for what Reliance actually does. I mean, to be fair, the stock has already made an attempt to try and participate in this last lap of the rally. But, most brokerages are now betting on value unlocking for Reliance shareholders via Jio Financial Services. Remember, the demerger of JFS or Jio Financial Services has been approved now by the NCLT. The record date has been set and the listing is expected to happen within the next 2 to 3 months. The effective date of the scheme is July 2023 as well. It's a share swap, 1:1. And every Reliance shareholder will get 1 share of Reliance Strategic Investments Limited, or RSIL, of the face value of 10 rupees per share. And RSIL will subsequently be renamed as Jio Financial Services. So JFS, remember, owns about 6.1% stake in RIL, which is valued at about almost 110 odd crore rupees or so. And this would represent a substantial portion of JFS net worth. And the balance would be the JFS net worth, excluding investment in Reliance shares. So, yeah, this is an interesting one to look out for. Let's see whether Reliance can comfort and cushion the Nifty, at least today. But Santosh Rao joins in on the show right now to talk about what he's making of the global market temperament. Santosh, hi, good morning. Great to have you on the show. Help us understand, how are you reading into the, global data points, especially that the stock futures are climbing this morning ahead of the key inflation data this week?
Yeah, thank you for having me. Well, it's kind of a wait and see at this point. Now we're in the zone where we are going to get a lot of data. The CPI, like you said, is coming out. And then, of course, the Fed later on in the month. But I think overall, I think CPI is going to be a good tell. I mean, it's pretty much anticipated that 3.1% at the headline level and 5% at the core, which is still sticky, still way above 2% that the Fed is shooting. So that is still, but it's rolling over. It's coming down gradually, and that's a good sign. But I think what the Fed is definitely going to do, and they have telegraphed it very well, 1 rate hike is definitely in the bag. They've already said it. So that'll happen. And then there's another one also, the probability of another one also, only because it is still sticky. Like I was listening to your earlier commentary, the wage inflation is still high. And overall, I think the numbers are still hot on the inflationary side. So inflationary drivers. So I think that's going to really keep the Fed on path, on the hawkish path. But overall, let's see what the earnings reports say this week. We want to see the credit conditions, the loan growth, because the big risk right now, or the big expectation, is that the lag effects are going to start playing out. We are in that zone now, about 9 to 12 months, they say, where the lag effects kick in, and that we're going to enter that. So the second half is going to slow down. It's not going to be 2% growth in the first quarter, 2% in the second quarter, most likely. But I think the GDP is going to slow down. Things are going to slow down. So I think the second half is going to be important. It's going to slow down. The lag effects are going to kick in, and the rate increases also are going to play a bigger role in slowing down or tempering down the temperature of the economy.
Bring down the temperature, that's what we are waiting for. But Santosh, what's your own expectation with respect to the hard landing versus soft landing? Because that's been the key question where the street is really divided. Stock markets don't seem to be pricing that at this point of time. They are in their own bull market. What's your call? How are we likely to land, and your view on the markets?
Yeah, I think it's going to be, we believe, or I believe, and I've maintained that view, that it is going to be a soft landing, only because this recession has been expected for a while. The companies, the market have already anticipated and adjusted their portfolios, if you want to talk about the stock market, and the companies have already started downsizing and everything. So this recession is, people are expecting it. There's still money in the bank. The consumer still has some savings there. So I think they can they can face the blow that this recession is going to cause, which is not going to be that deep. It's going to be short and shallow. That's what I believe. And we'll come out of it on the other side. Pretty much it won't be broken up. I don't think things will break unless you have any commercial real estate and all that breaking in. But I think overall, I think things seem to be under control. We're cruising along, even though there are some concerns, but they want things to slow down, and it is going to slow down. Second half, it is going to be a soft landing, and I think we'll start picking up again in the first quarter of next year.
In light of the fact that, of course, we have that CPI data as well as the indications from the Fed, what's the outlook on the road ahead? What's the view when it comes to the bond yields going down the line?
Yeah, I think bond yields, we'll have to wait and see where that goes. But I think right now, it is when a 10-year breaches 4%, that's not good for the stock market. When you can get risk-free 4%, I think that people are going to pull money out of the stock market. I think that is a big concern at this point, that the bond market, if the yields continue to go up, we'll wait and see where that goes. At this point, it just fluctuates based on the news flow. But overall, I think the short term is going to stay there. 2-year is going to stay there, and the 10-year has picked up. And it's good. It's good in the sense we've never had such high yields, and we need that. So I think money is going to flow into that side of the market. So I think that's the big risk for the stock market. But the bond market is good that the yields go up. But overall, it's going to have a inflationary, or rather the slowing down effect on the market. If things are so high, people are not going to take mortgages out and not go out and buy new houses. So things like that. So it has an effect on the collateral damage of higher yields, but overall it's good for the savings rates and all that, and the stock market, in the sense that you get risk-free money out there, risk-free return. And that's a good part about high yields. And people are expecting things to stay there for a while as the Fed continues to go along this path.
So high yields gets you that other investment opportunity as well. Thank you, Santosh, for joining us and dissecting for us how to read the latest economic data as well as where the US economy is headed. But time now to talk about our own economy and our own markets as to where they are headed. As usual, we have Naresh Murani as well as Kunal Bothra joining us to talk to us about the technicals of the market. Naresh, you go first. Last week we saw that mark of 19,500 but retraced when it comes to the Friday's trading action. What's the direction like going to be this week?
So expecting a pause to continue, we get into a new band, which is where, say earlier we had this band of 18,600 to 18,900 roughly. We could get into a 400 pointer band now, which could be 19,200 to 19,500, 600 on the upper end. And this could be the band wherein we continue to trade, not expecting a breakout going forward, but stock specific rotation could start. So a little bit of a pause is necessary. At higher levels, we'll continue to see selling. So time now to expect this consolidation on the index and maybe some selective mid caps and small caps and new rotation even in the large caps. So time to be more selective than what was before.
Okay, be selective. That's the word coming in from Naresh. Kunal, hi, morning. You think some more consolidation on the cards or maybe even a dip?
Well, good morning, Ayesha. So, expecting consolidation, not too much of a dip for the indices. I think the major part of the correction seems to be behind us. We've corrected some 150, 180 points odd on the Nifty from the 19,500 odd mark on an intraday basis on Friday. On the Bank Nifty, I think the correction has been more steep. I think it's been more than 750, 800 points of a correction. Now, given the kind of market internals we are actually seeing, it's very difficult to anticipate that we would probably get into a much more deeper or a sharper correction on the indices. At best, even if you consolidate, say, for the next 1 week, then I think that also would be considered quite good as well as healthy for the markets, as well as for the index. So I would expect more of a time-wise correction rather than a major price-wise correction for the index. But in case if the Nifty dips back towards 19,200 mark, that could actually be a very good point to reinitiate a buy, which we closed off last week.
All right, let's nail it down to stock-specific ideas then and find out what exactly our chartists are betting on. And Naresh, what's looking good this Monday morning on the charts?
So going with a buy and sell. First is a buy on Bosch Limited. The stock has given a clean breakout over the last two sessions. It's almost a cup and handle breakout, crossing that 19,400, 500 mark, which was a stiff resistance. Closed well even on the markets on the day when markets were under pressure, indicating relative strength as well. Expecting this to continue towards 21,000 today. Stop loss at 18,900. Second is a sell on Titan, which saw a spike up move on the quarterly numbers, update numbers, but the price action by end of the day was negative. Expecting a short-term correction out here, a sell on rise from current levels, a strict stop loss at 3,200 and a target price of 2,900.
Stocks that you're betting on this Monday morning?
So, Aisha, there will be first one is a buy on Z Entertainment. I think that's the stock which showed very good recovery. We were discussing this on Friday and mentioned that there's been first indication of a change of trend for Z. So I'm taking my bets over here. Would suggest a buy, high risk bet on Z Entertainment, targets of 220 over the near term, stop loss to be kept at 196. And the second one is SBI. Again, PSU banking stocks doing the charm for the banking sector as such. We've seen many of these PSU banking stocks closing at their week high as well as the intraday highs for themselves on Friday after recovering from an intraday correction. So that also gives confidence that maybe the PSU banking stocks have more room on the upside. Would suggest a buy on SBI, 620 as an immediate target, stop loss at 575.
Okay, let's move on. And today marks a very special day. Here celebrating Asia's oldest stock exchange, the Bombay Stock Exchange, which was established back in July 1875 and has since clearly become a critical pillar of the global stock exchanges as well, with more than 4,000 listed names now. So today on the BSE Foundation Day, my colleague Ankur is right there on ground zero to walk us through how the journey of the exchange has been and get us some insights perhaps from the BSE veterans. Ankur?
Yes, definitely. The celebrations of 149th Foundation Day of BSE is about to begin, and we are standing at the event. You can see right behind me the people have started coming in, and as far as the BSE is concerned, one can definitely say that this is something whenever you talk of financial independence, whenever you talk of history of stock markets in India, BSE has been an important landmark and set up in 1875. It has a long history. If you talk about the key events which has been the history of BSE, that one has been the 1990 when the Sensex first time crossed 1,000, and after that it has been a journey. And apart from that, if you see that BSE is small cap listings is something which has been there for a while, and that is something which has caused the traction. And in 2017, one more landmark happened for BSE when it got itself listed on another stock exchange. Now, this is something which is a history for BSE. This is important, as I said, for any of the person who talks about business, who talks about stock market, and hence we will definitely bring you all the live updates from this 149th Foundation Day of BSE.
It is a memorable day. Thank you very much for giving us those details. Asia's oldest stock exchange, 149 years being celebrated. And of course, through the day, we will keep getting you updates and highlights and insights from a lot of BSE veterans. But let's move right on then and hear it out from market expert Krishna Kumar Karwa, MD at MK Global Financial Services. He talks about sectors that he believes are the most underrated and overrated. Listen in.
I think some of the sectors which in the last 2 years have not done well, and of late, at least valuation seems to be in their favor, and we have seen some move already coming in. So I have been talking about insurance sector for some time, and now it has started playing out, where the margin of safety was very high in terms of the valuation. So that was one segment where we could see. Another segment, I think, which has not done well in the last 12 to 18 months, relatively smaller segment, but again, the whole agrochemical space. For various reasons, including supply chain. I mean, overall glut in the overall ecosystem globally, and poor monsoons, etc., overall. But I think the valuations of many of those companies have come down to very attractive levels. So this is where some valuations should favor you. I don't deny the opportunity as far as the defense opportunity is concerned, but look at the valuations of many of those companies. I think there's clearly a sense of exuberance which is prevalent in that segment of the market. So yeah, I mean, you have one buyer and not no guarantee on cash flows for order books and all to value companies based on incoming orders. I don't think so. That's the right way to look at companies. So that's one segment where clearly there seems to be a lot of over exuberance, which we can possibly see.
Okay, so that was the commentary coming in from MK. But the other big thing that we're watching out for is, of course, the progress of monsoon. And as we talked about earlier, over the weekend, there was this unleashing of the, rain gods, if you can call it that, because heavy downpour across North India, right from Delhi, Himachal, Uttarakhand. And in fact, flood warnings have been issued in several areas. Highest rainfall in Delhi within a day itself, the highest that we have seen in 40 years. And as a result, a lot of damage has been done to the civil infrastructure as well. But is it likely to continue? Let's discuss that with Mr. M. Mohapatra, the DGM at IMD, joining us. Mr. Mohapatra, thank you so much for making time and speaking with us. Well, this kind of heavy rainfall that we saw over the last couple of days in North India, is it likely to continue?
As of now, the activity has reduced significantly over Haryana, Punjab. But however, we are expecting the activity to continue today over Himachal Pradesh and Uttarakhand, the adjoining areas of West UP. The comparison, if you make compared to yesterday, activity will be less today, but still we can expect heavy to very heavy rainfall over Himachal Pradesh, Uttarakhand, adjoining West UP, and Haryana. But however, as far as Delhi is concerned, yes, the activity is significantly reduced, and we do not expect any heavy rainfall today.
But what about the alerts? Have you been issuing red or amber alerts for certain areas?
Yes. The alert is still on for Himachal Pradesh, Uttarakhand, and West UP.
Mr. Mohapatra, we understand that rains have actually swung from 10% deficit to now a surplus of about in the last 8 days. Help us understand, what trajectory do you foresee for the rest of July and even for the month of August? Because many parts of the country would still have monsoon next month too.
As we predicted on 30th June, that month of July will have very good rainfall activity. It will be on the positive side of the normal. And accordingly, if you look at so far, July has 30% above the long period average rainfall till 9th of July. And that high amount of rainfall has compensated the deficiency which occurred in the first fortnight of June. And as of today, the cumulative rainfall from 1st June to 9th July stands at 2% above the normal. And if you look at the distribution, Northwest India has got very good rainfall activity, along with Peninsular India and northeastern states. Some parts of eastern India, especially, Bihar, Jharkhand, Odisha, against West Bengal has the deficiency. But however, if you look at the remaining days of July, we expect that the rainfall activity will continue and we will have the uniform distribution of rainfall in different parts of the country. The central part and eastern part, which I told having deficiency, they are expected to get good rainfall activity from 12th onwards.
Okay, Mr. Mahapatra, great to have you on the show and thanks for giving us the color on how monsoon is likely to pan out. For now, it seems that the quantum of the rainfall could at least recede a little bit in the days to come. On that note, we're going to take a very quick break. The GIFT Nifty this morning is indicating a mildly positive start. Let's see where we go from there.
Welcome back. A lot of stocks are going to be in focus, so let's start discussing some of those. Balakrishna Industries is one stock that we are watching out for. There was a management meet that occurred and they have once again highlighted that they aim for 10% global market share when it comes to the OHT or off-highway segment as well. Sharad is joining us with more details as to the takeaways from this management meet. Sharad?
Well, yes, important commentary coming in from Balakrishna Industries management, and they've stated and they've highlighted the vision for a 10% global market share when it comes to their OHT segment. And the OHT segment is, of course, the off-way highway tires segment, and currently the market share for the company in the global scenario stands between 5 to 6%. Apart from this, they have also reiterated the medium to long-term EBITDA guidance, and that is ranging between 26 to 28%. But currently, if you look at the numbers for FY23, that number stood at 20%. So there is, of course, of 600 to 800 basis points of increase in the medium term. Apart from this, the main question is the channel inventory. That has been an issue for the stock, and it is still higher than the normal, especially coming in from the European and the North American markets. But the end user demand, that is something they have stated is still holding up. Apart from this, the expected scenario for the inventory normalization is expected to kick in from the second half of FY24, and the full benefit of lower raw material costs, that is also expected to kick in the second half of the fiscal year. Apart from this, they have also stated that there won't be any price cuts, and the ASPs, which is the average selling prices, they should normalize to roughly 300 rupees per kg, as some of the commodity benefits come with a lag period. And of course, the benefits will be passed on. And lastly, they have stated that a better product mix should aid the ASPs and the margins over the medium term.
So Balakrishna Industries is one of the stocks that we'll be watching out for, but the big one to watch out for, of course, is going to be Reliance. A couple of news pieces have happened over the weekend. One with respect to the unlisted retail arm, wherein the non-promoter shareholding will be reduced. And second, of course, when it comes to the record date of the financial services. Let's try and decode both of them with Somit joining us. Somit, first up, let's talk about the retail, decision that the company has taken. They're looking at extinguishing the non-promoter holding and the valuation of around 1,300 thereabouts. What do you make of these two factors?
So firstly, when you see at the retail announcement that has come in, so on Friday they said that they'll be cancelling around 34 lakh shares of Reliance Retail Limited. Now these shares are owned by the public shareholders and they own close to 0.07% stake in the company, which is and for that they're going to get around 1,362 rupees per share. Now, why is RIL doing so? Why is it giving this exit option to these public shareholders? Because this is not the first attempt. They had already made an attempt back in 2019 when they wanted to give them an exit from Reliance Retail, but that failed. However, and currently the structure of Reliance Industries, if you see, Reliance Industries owns around 85.06% stake in Reliance Retail Ventures, which then owns around 99.93% stake in Reliance Retail. And going in future, if you see, even if Reliance Industries wants to list its retail arm, it will be Reliance Retail Ventures that will get listed on the exchanges and not Reliance Retail. Hence, to provide an exit, Reliance Industries is buying back the shares from the public shareholders at around 1,362. Now, when it comes to the valuation part, at 1,362, Reliance Retail is valued at close to 6.8 lakh crore rupees. Now, the future value of Reliance Retail could well be higher given the fact that there are a lot of convertible instruments in Reliance Retail like preference shares and debentures, and if on diluted basis, assuming that all of that gets converted, then the valuation goes up to 12.7 lakh crore rupees. Now, brokerages on an average value Reliance Retail, the entire retail arm at close to 9.2 lakh crore rupees, which includes the Reliance Retail offline stores, all the retail related acquisitions that the company has done since 2020, and also the e-commerce businesses. Now, how has the valuation moved so far for this retail arm? Now, in 2019, when Reliance Industries had made the first attempt, they were valuing the retail arm at close to 2.8 lakh crore rupees. In 2020, when RRVL structure was formed, and RRVL at that point owned only the offline stores of Reliance Retail, and a lot of PE investors had also come into the company. At that time, it was valued at close to 4.7 lakh crore rupees. So this means that in nearly 3 years, the valuations have moved up by around 45%, and in nearly 4 years, that is from 2019 till now, the valuations have moved up by around 2.4 times. Now, what we are hearing in the market is that in the channel checks are actually indicating this, that in the unlisted space or in the private market, the Reliance retail shares were trading at around 2,700 to 3,000 rupees. Firstly, it's a private market, so there is no proper value discovery on that front. And if you see at 2,700 to 3,000, Reliance Retail gets valued at close to 15 lakh crore rupees. Now, this compared to Reliance Industries market cap, that stands out 18 lakh crore. So, this is definitely not possible, given that Reliance also has the telecom business, the oil to chemical business, which is the cash generating business for Reliance Industries. Now, the experts to whom we spoke to, they are also indicating that the valuations were totally not in sync, and now this gives a proper benchmark to Reliance Retail. And also they are saying that RRVL valuation is more important to watch out for, given that in future it's RRVL that could get listed if at all they are planning to list the retail arm, and it's not going to be Reliance Retail. So the private market valuations don't matter actually in this case.
Today is going to be a critical day to look out for Reliance's share price and how investors and shareholders are going to absorb this bit of news. But Somit, Sign, DLM, looking at the subscription numbers, what are we expecting today when it lists?
Well, on Friday, we did see a bumper listing coming in from IdeaForge, and similar kind of listing is what the street is expecting when it comes to Sign DLM. Now, it is an integrated EMS provider. Will be listing on the exchanges today, and at issue price of 265, you see the market capitalization of the company comes to around 2,100 crore rupees. Now, given that the entire fundraise was a fresh issue, the promoter holding is expected to come down to 66.7 from 92.8% earlier. Now, the funds raised by the company, they are planning to use that for working capital purpose, for the capital expenditure, for acquisitions, and for debt repayment. Now, over the last 4 years, if you see, the company's revenue have grown at a CAGR of around 15%, while it has also turned profitable. Also, the net profit margin, that is the peak net profit margin of the company, stood at only 5.5%. Now, if you assume that the company's revenue grew at 15% in FY24 as well, and the profit margin is at peak of around 5.5%, then Sign DLM could generate a profit of around 53 odd crore rupees in FY24. Now, based on this, if you see, the FY24 PE for a Sign DLM comes at around 40 times, which is at a discount to its nearest peer, that is Syrma SGS and Keynes, which are trading at around 42 to 45 times. But given the strong subscription numbers and what we are seeing from the grey market premium, we are understanding that the stock could list at a premium of at least 50%. So we are giving here 3 different scenarios. Now, at 30% premium to issue price, the market capitalization of the company on listing could be around 2,500 crore rupees, while the PE would be at 48 times, which would be at a premium to its peer. At 50% of premium to issue price, the market capitalization of Sign DLM would stand at close to 3,200 crore rupees, and the PE would be at 60 times. And at 70% premium, also if you see, the market capitalization would be at 3,600 and the PE would be at 68 times, which would be at a significant premium to its peer. In fact, it would be at a premium to Dixon Tech also, which is the most valued EMS company in the market currently, if you see.
Interesting, because remember when that Sign DLM IPO was opening, we were talking about the reduction of size, but then there was this clarification that it's not actually a reduction, but they had done the pre-IPO allotment to
But it was actually a reduction. If you see
5 to 10%, right?
Yeah,
hardly.
Because in pre-IPO at that moment they were looking to raise 140 crore rupees, which was brought down, and the combined issue size, if you see, including the pre-IPO, was at what they were looking to raise actually from the fresh market. They were looking to raise around 700 crore rupees, and then they reduced it to 700 crore rupees, including the pre-IPO placement that they had done.
But that's not expected to change the grey market premium or anything that we're expecting on listing,
premium
right?
is what is going around in the grey market.
Looks like it's been having a stellar run as far as the IPO market is concerned. But I just wanted to come back to Reliance, because one of the portions left undiscussed with respect to financial services and the record date that has been announced with respect to that. Does that impact the fund flows in any way? Because what are you expecting with respect to, because there are some technicalities that it will be listed for one day on the Nifty, etc. Explain all of that to us.
Well, nothing related to fund flow that is going to happen in Jio Financial so far. So the demerger date is now the record date for demerger is July 28th, which means that the FNO contracts would expire on July 19th for Reliance Industries. And on Nifty, according to the new regulations, the Jio Financial would be a part of the index at a constant price. Now, what is this constant price? Is the difference of price of Reliance Industries before the X date and post the X date. So Jio Financial would be a part of Nifty for at least the three trading days till it gets listed on the exchanges. When it comes to Sensex, now as per current rule, if there is a demerger or any major corporate action, then the stock usually gets out of Sensex. So Reliance Industries could get out of Sensex, but what the street is expecting is there could be some amendment given that Reliance Industries has a major weightage when it comes to the Sensex index. On the MSCI, the analysts are expecting that it could be retained in the standard index, while when it comes to FTSE, they are saying that it could be a part of the FTSE global index and it will be removed from the trading, if it will be removed from the index, that is the FTSE index, if the trading on Jio Financial does not start within the next 20 days from the X date. So this is what is expected broadly if you see when it comes to the global indices and the domestic indices like Nifty and Sensex.
Right. Samit, why this downgrade on Titan though? I mean, moving away from Reliance now, even though the Q1 update being that strong.
Well, firstly, when it comes to Titan, if you see even on Friday, the stock move, if you see from days high from 3%, we had seen a downfall, though the entire market was showing some weakness. But for Titan specifically, what Morgan Stanley here is suggesting is that they're expecting a slowdown going forward in consumption of coal. And secondly, they're also saying that the valuations are expensive. Now, on the valuation front, if you see the 12-month forward valuation of Titan stood at close to 68 times. Now, this is ahead of its 5-year average of 62 times. Also, the growth that they were indicating in fourth quarter of FY23, the growth stood at around 25%. In Q1, it has already come down to 20%. And what Titan and what Morgan Stanley is indicating that as per Hindu calendar year, there are no wedding dates when it comes to the second quarter of FY24 and only 12 wedding dates in the third quarter of FY24. For near term, they're expecting some slowdown which could weigh on the share prices going forward. So that is the major reason coming in for this downgrade when it comes to Titan. And they're also saying that high gold prices could also impact the discretionary consumption going forward. So broadly, these are the factors when it comes to Titan that could lead to a slowdown and the reason behind this downgrade coming in from Morgan Stanley. And this is obviously the first downgrade that we're seeing for Titan from Morgan Stanley from 2021 till now.
Morgan Stanley since 2021 or across the board?
Across the board, actually, to be frank, I haven't seen any bigger downgrade coming in from any foreign brokerage so far. For Morgan Stanley specifically, October 2021 was when they had upgraded the stock to a buy, and since then it is the first downgrade coming in.
Okay, so that's about Titan and a whole host of other counters that will be in focus. Thanks, Amit, for joining us with all of that. But let's take that discussion forward and toss it to Pankaj Pandey as well. He's joining us from ICICIdirect.com. Pankaj, let's begin with Titan itself. As my colleague was pointing out, it seems like there are headwinds in the second half of the year, not as many wedding days which are there, and perhaps the best is over, at least that's what Morgan Stanley is saying. Do you concur with the view?
So, hi, good morning. Thanks for having me. One challenge with Titan is it's trading at about 57, 58 times FY25. So valuations are definitely expensive. Last 5 years, they have delivered 21% kind of a CAGR in top line. Our sense is that even with higher gold prices, the growth could be about 18% odd. And I think they're pouring into international markets also, while that may not really add too much in terms of numbers overall, but growth trajectory largely remains intact even with the higher gold prices. But like I said, the challenge always is with valuation. So we have target price of 3240. I think we'll sort of wait out for the results to sort of come by and then probably look at in terms of directionally where we would want to sort of take. But it's a big market of 4 lakh crore. They still have single digit kind of a market share. So from that perspective, I think structurally, there will be one of the few consumer oriented names which will continue to deliver high teen kind of a growth. I think valuation is the only sort of a challenge what we see going forward.
Okay, there you have it. But let's also get in your take then as to what the outlook is, Pankaj. Morning, firstly. When it comes to a whole host of these PSU banks as well, given the fact that we are seeing that catch-up play to some of the private sector peers, do you see now this sector holding a lot of promise?
Absolutely. I think so. PSU Bank is somewhere is one segment where we feel that things are looking up very well. I think most of your PSU banks, say for example, Bob or Indian Bank, they are inching closer towards 1% kind of ROA. Valuation is still sort of attractive at 0.8, zero point 0.9, and our sense is that with the kind of overall credit growth which is sort of panning out, credit cost is not expected to sort of inch up over the next 2 years. So possible, some bit of a re-rating is very much possible in these PSU banks. They've seen a bit of a run-up, but our sense is that there's still a lot more juice left, and which is why our preference would be banks like, say, Bob or Indian Bank. But in general, PSU banks, we are liking a lot at this point in time.
Pankaj, what is it that you're making of Reliance, and as to how this entire, geo-financial services bit will play out, and whether or not it would actually lead to value unlocking for existing RIL shareholders?
So I think on Reliance, our target price is 2850. I think on the Reliance retail bit, we were sort of valuing at about 9.5 lakh crores. On a 2-year forward basis, I think the current value is about 6.8, so a bit of a lower compared to what we were sensing. The private market was higher. I think on the geo financial services, at best, initially we would look at one-time book. So beyond that, until and unless we don't get a wider set of plans into what it intends to do, I think we would not see a valuation inching up because of geo financial. But I think one crucial aspect what we need to sort of watch out for is that Reliance GRMs had been softer compared to some of the PSUs what we have seen. So our sense is that if they are able to sort of deliver GRMs, probably this near-term weakness might not sort of pan out, and stock could do well. We are already seeing this company being beneficiary of the electrolyzer or new segments. Where I think they are looking to sort of play the entire spectrum. So triggers are there in place for the stock to do well. Valuation of Reliance Retail is a bit negative according to us.
Yeah, and talking about triggers in place, that's not the case only for Reliance, but for Tata Motors as well, right? Pankaj, of course, we got that update on Friday, and they're talking about big targets when it comes to fund flows as well, free cash flows, that is. And it seems like they're managing to do that. Plus, there are additional triggers, the likes of commodity prices easing, as well as Tata Tech IPO, which is lined up. Do you expect Tata Motors to continue this rally, because it's already at record high level?
Absolutely. I think it's been one of our top performers. Our target on Tata Motors is 700 rupees. Now, when you sort of look at JLR, volumes are 93,000. So I think it is better than what even the management had guided, or even what we had taken at about 90,000 odd. And good part also is that on the domestic side, some of the laggard segment like CV, the volume growth was quite decent. And margin profile there is sort of improving for almost all the players. I mean, not only for Tata Motors, but even for Ashok Leyland or even for Ayesha. So I think you're getting volume growth, plus you're getting margin improvement. And I think given the fact that overall capex as a cycle is still looking quite good, so our sense is that Tata Motors will sort of continue to sort of do well. And along with, yes, obviously you have triggers in terms of Tata Technologies getting listed. So I think we continue to sort of like Tata Motors, and our sense is that 700 is on the horizon for this stock.
Pankaj, the week on by spelled a lot of action for the two-wheeler space as well, right? First, downfall in Ayesha with regards to the new launch from, Bajaj stable, as well as the Hero Harley combine as well. Wanted to understand, how do you think things are going to move within the two-wheeler pack, and whether or not one should look at buying this dip in Ayesha, or do you think Ayesha's dominance in the two-wheeler market could get seriously challenged by Hero and Bajaj?
So on the two-wheeler front, we have seen Ayesha correcting more than 10%, largely because there has been launches by both Bajaj as well as Hero MotoCorp. I think our sense is that market is sort of looking at one direction in terms of higher competition, and that might impact volumes. But when we sort of look at a decade back, say 2013, the overall volumes in the 250 plus cc segment was about 1.22 odd, and that has sort of expanded now to closer to about 8 lakh units. So our sense is that while there has been a near-term weakness or more what is the market is sort of pricing in, but our sense is that going forward, it has got the potential to sort of expand this entire pie, and premium as the segment has been where we have been focusing more on, and which is why we have sort of continued to like Ayesha Motor despite good valuations. So our sense is that this near-term weakness should be bought. I think it will lead to more of expansion of that segment rather than sort of shrinkage in terms of margins or overall growth being impacted. So in Ayesha Motor, we have a target price of 4165.
Okay, I wanted to also get in your take then, Pankaj, as to what the expectation is from heavyweight TCS as it kickstarts the earnings later this week.
So I think on the technology front, a good part is that we haven't seen much of a price performance. So overall, there is not much of an anticipation in terms of result, typically what we have seen earlier. So most of your tier one names are going to sort of deliver 0.5 to 1% kind of a dollar revenue growth, which again is not a very significant number. I think the commentary, especially outlook, is more important. But our sense is that Infosys looks attractive given the fact that overall it is trading below 10-year average. And if they're able to sort of deliver slight positive commentary or slight better set of numbers, I think that is one stock which can sort of do better compared to the rest of the pack within the tier one names in IT.
The valuations are so beaten down and the street is already factoring the worst from Infosys. I guess there's only one way to go, and that's surprise positively, right? Pankaj, quickly your take regarding some of the recent IPOs as well. Is there any name that you like? And as a retail investor, what are you advising if the stocks do open with a gain of 50 to 90%, 90% the case that we saw in Idea Forge last week and 50% today, hopefully on Cyan DLM? Do you tell the investors to book profits?
So generally in IPOs, we have not been very sort of a big fan of IPOs, largely because valuations have been sort of rich and a lot of expectations are sort of riding. So typically, we would prefer companies who sort of get listed and probably a year or two down the line when things sort of normalize. When the expectation sort of normalizes. Which is why we have not been really sort of chasing or have been advising investors sort of chase IPOs big time.
Not chasing IPOs at this time, but Pankaj, what about the entire life insurance space? And within life insurance, of course, we've got the latest monthly data and they have reported the APE growth of anywhere between 10 to 17%. But the question to you is that HDFC Life from the lows has already run up a bit. Do you think now it could be the time of SBI Life to do the same?
So I think both HDFC Life and SBI Life are trading at about 2 times or 1.9 times on a EV basis. Now, for life insurance to sort of keep continuing to sort of keep performing, I think we need to see whether we are going to see a double-digit growth in the overall insurance premiums, and that is where we are still not very sure of in terms of growth, and which is why, despite the run-up, probably we are still not sort of looking to chase. But yes, SBI Life has been a relative outperformer in terms of insurance premium growth. And valuation-wise, probably it can sort of is a bit lower compared to HDFC Life. So yes, it can tactically sort of outperform HDFC Life to some extent.
Stay on with us. We'll get you some technical chart checks. But first, fundamental stock picks. And here's what Dipan Mehta is looking at when it comes to auto OEMs.
Yeah, I think if auto OEMs are doing as well as they are and they are moving up the value chain, then that is very positive for the auto ancillary companies as well. And we prefer companies which are focused more on the infotainment, on security, on better interior, all of the characteristics in a auto, in a vehicle, which increase the premium value. And companies, I think, which are engaged over there, which have got no threat from EVs, are companies like Sona, BLW. Then you have Minda, Uno Minda, as well as Minda Corp. I think three companies certainly come to mind, and there may be many others as well. So we generally prefer companies which are in the electronic space rather than the engine part space. Coming specifically on tires and batteries, I think they're benefiting tremendously from lower commodity prices. And overall, I think as and when the economy and transportation starts to do well, the replacement market and replacement demand also kicks in for both these sectors, and that also is very positive. The problem with batteries is that longer term, the EV thread is keeping the price to earnings multiple under check. And when it comes to tires, the excessive capacities which are getting created, that also is a kind of a risk factor. But by and large, I think next 3-4 quarters look exceptionally good for auto OEMs as well as auto ancillaries.
Get some chart checks going then, and it was nothing short of a spectacular trading day, Kunal, when it came to two stocks within the entertainment space, Z Entertainment and PVR Inox, I mean within the media space. What's your outlook?
Well, Z is something which I would highlight at current levels, Avanne. In fact, my sense is that the stock is looking very attractive at the current zone. The kind of breakouts which you've seen for Z, the stock making a pattern of lower highs and lower lows. So on Friday, what has happened is after this kind of an upward move for Z Entertainment, the stock has confirmed a breakout for itself of this downward sloping trend. And with the breakout of this 200 mark, the stock has also broken back about the psychological level. We've seen ideally that these round strikes or these round figure marks, they generally act as strong strikes where there's a lot of call as well as put writing. So now there should be a change of stance for Z Entertainment, where 200, which was being a resistance, could now actually start being a support for the stock price. I don't expect the volatility to settle down immediately, but possibly from here on till the next 1 or 2 weeks, I expect the stock to gradually move up higher. PVR Inox also could be an interesting case because the stock was beaten down significantly. We saw the stock showing signs of strength. On Friday, we saw the stock moving back above that 50-day moving average of 1400 plus mark. It's still way below its 200 DMA, which means that the stock could probably do a lot to recover to those 1600 odd levels, which is the 200 moving average. But I think the breakout which you've seen for PVR Inox as well on Friday indicates that the stock may have some more room on the upside. 1500 approximately is what I would expect as a near-term target for PVR Inox. And as and how the trend moves up higher is where we can revise the targets for the stock on the upside.
Expect volatility to continue for Z and for PVR Inox as well. It's a bit of a wait and watch. We'll keep tracking that one. But Naresh, I wanted your sense regarding a couple of names which might be in focus today on account of news flow. From the real estate pack, we hardly talk about Max Ventures. That one is now doing quite well, at least on a fundamental basis. Recently, they're one of the launches in Noida as well in Sector 128 has managed to get pre-sales of 1800 crores already. And the other one is IRB Infrastructure, wherein the toll update for the month of June is out. And they've managed to report a double-digit growth of almost 16-17% on the toll side. What does the chart check suggest on both?
So Max Ventures looks interesting. The stock has been making higher tops and higher bottoms, closer to a new 52-week high and an all-time high. The stock from here on can also do well. Buy at current levels also if one has the risk appetite to keep a stop loss below 195. That would be a little deeper, but the stock is trending really fine. The only problem is the stock has moved up from 130 in April to 210 today, roughly. So it's been a sharp move, but overall the trend is still positive. Looks interesting even at current levels. IRB Infra, on the other hand, has been sideways for the last almost 2 years now. Every time the stock has spiked to that 32-33 mark, the stock has gone through a correction. And 23-24 has been the support on the lower end. So we are right in the middle of the range. Tough to take a call here. So no views on IRB Infra as such.
Those are some of the movers there that Naresh is flagging off. But in the meantime, just also want to take note of some of the stocks that had a pretty terrific week gone by. On the Nifty 500, for instance, something like an Electra Green Tech, if we could pull up the 1-week chart, it was a solid 27% up move that you saw on that stock. So pretty phenomenal move. Bulk of it toward the fag end of the trading week. We flagged off something like a Suntech Realty as well, which gained about 18%. Lots of updates as well coming in there. Suzlon, of course, was one of the stocks that was really buzzing. But of course, do keep in mind it's 17 to 18 rupee stock. You had something like a Punjab National Bank, which shot up about 17%. And BSE too had a pretty strong week, tracking gains of close to 16%. Kunal, comment on the charts of an Electra Green Tech or a Suntech Realty. Is the momentum here to stay?
Well, it definitely is because, so both these charts are completely different. Of course, there are two different sectors, but then, Electra Green Tech is a stock which is trading at its life highs as well as the last 4-5 months of momentum has been exceedingly strong. Now, 5 months back or 6 months back, the stock was almost at 400 rupees. Now we are talking of the stock at 1,000 plus levels. Look at the cumulative volume of the stock in the last 4 to 5 months. It's the average volumes for the stock on a monthly basis is almost 2.5 to 4 crores on the NSE, which in comparison with the last 1 year for the stock when it was consolidating, going into a downtrend, was just about some meager 70, 80 lakhs for the stock price. So there's been a decisive change of trend, both in terms of volumes, and that has actually resulted into the prices moving up higher for Electra Green Tech. The stock is significantly above its long-term averages. So what we can just expect is that there could be minor phases of pause or a consolidation, and I think that phase of a pause or consolidation should be taken as an advantage to buy the stock price. The trend is extremely strong. Suntech, on the other hand, the stock is trying to get into recovery. I think, if I'm not wrong, there were 2 strong days of price carrying for Suntech Realty. The stock moved up higher. It's still trading much below its 200 moving average as of now. So I would believe that this recovery process, which you've seen for the last 2 days, could at least take the stock past about the 200 DMA. Maybe 360, 365 could be an immediate target, which means a potential upside of at least another 10% is what we can expect for Suntech Realty.
Okay, Suntech Realty in the recovery phase, expect 10 to 15% upside when it comes to that particular name. And Electra Green Tech too has been riding the high wave. But Naresh, what about a couple of these metal names, Vedanta as well as Hindustan Zinc? They might be a bit somber in the trading session today. Should one use this opportunity to bottom fish?
Sideways to down for the whole sector as such. If you look at Vedanta, the spikes to 300, 320 got sold in the previous move last year. And overall now also, if you look at the last, say just roughly the range of the last 1 month, the stock has been in a range of almost less than 15 points also. So out here, the trends are weak. No point trying to bottom fish. Let it make its base and then maybe look at it. But Hindustan Zinc, on the other hand, has seen a price volume action. The stock, but every time the stock sees a good price volume action, it again fades off. The only returns majorly come up is in the form of a huge dividend. So it's a difficult stock to trade unless it has corrected really sharply, which does not look like as of now.
Okay, fair enough. Meantime, lots of other stocks as well that we'll be tracking as we flagged off. Updates coming in from the likes of an IRB Infra, where the total revenues for the month of June have come in high by 16%. The management as well said they expect similar momentum for the rest of the year. And Keystone Realtors said that they've achieved the best ever Q1 pre-sales. Something like a Sula Vineyards, where they've recorded the highest ever Q1 revenues, double-digit sales growth in Q1 with net revenues higher by about 24% on a year-on-year basis. So those as well are some of the stocks that we'll be tracking in today's trading session. Meantime, Pankaj, just wanted to get in your thoughts then as to what the outlook. Okay. Meantime, Kunal, just wanted to get in your views then on some of these names as well within the entire mid-cap infrastructure space and IRB, Suntech, Godrej Properties. If we were to look at real estate and infra, what stands out?
So, Avanne, I would still believe that real estate is a sector which looks extremely attractive. Now, infra, when you look at these smaller names relatively, the likes of IRB, etc., these stocks have not gone anywhere. So, ideally, when we see the markets going into a higher risk on sentiment, we would expect that these high beta stocks, the likes of IRB, etc., could have done exceptionally well. But apparently, these stocks have disappointed, and there's not been any major change of trend materialistically into these names. So I would expect that maybe these stocks would be sometime away from their breakout points. So we'll have to wait out for maybe IRB Infra crossing back about the 30 levels, say 29, 30 odd mark, for it to be called as a breakout. But from the real estate pack, I think BLF, Anantraj Industries. Very recently, you've seen Godrej Properties as well as Oberoi Realty. These stocks have managed to give signs of a strong breakout. And these stocks are not at their recovery phases. Some of these stocks are trading at their multi-year, multi-month highs for themselves. So the chart patterns for the real estate sector has been quite strong, and I believe that it always makes sense to stick to the strongest sector because that's the performing sector for the trade, for the phase, for the markets. So I believe real estate is something to look out for. DLF, Anantraj would be the top two picks from the pack, and even Oberoi Realty as well as Godrej Properties are the stocks which are going through a very strong recovery.
Stay with the leader of the pack, and for now the leader of the pack is clearly Realty. But let's get some mid-cap strategies also from our chartist. Nuresh, you go first.
So that would be a buy on Granules India. The stock saw a very large volume day yesterday, as well as price tick also. The stock has crossed a 3 to 6 month high. The last range was 308, 310 levels. And the stock has been downward and a sideways trend for a long period of time. This is the largest price volume tick, so expecting this to continue slowly higher. Short-term target price of 340, a stop loss to be kept at 300.
Hey Kunal, what about you? What's a mid-cap strategy that you're spotting for us this morning?
Well, I'll stick to PSU banking stocks, and I think that's a sector which looks extremely charged up. So Canara Bank is a stock which I would suggest as a buy. Extremely strong momentum which we've seen for Canara Bank on Friday's trading session. So targets of 345, which you can revise it upwards. Stop loss to be kept at 320.
All right, let's get a move on then and tell you about some of the other top stories that we're tracking. And it's a big Q this morning as China's producer prices have sunk more than expected, down 5.4% in the month of June on a year-on-year basis. It's weaker than the expectations of a 5% decline versus the decline of 4.6% that we witnessed in May. Meantime, the US Treasury Secretary Janet Yellen has said that the meetings with Chinese officials over 2 days were direct, substantive and productive. The talks also provide a fillip to solidifying relations between the world's largest economies. Yellen's Beijing trip comes at a time when Washington is considering curbs on US investments in China amidst the escalating global battle for technological supremacy. And shifting focus to important geopolitical commentary, the US President Joe Biden has said that Ukraine is not ready for a NATO membership, citing the ongoing war. He added that the discussion on Ukraine's membership is still premature, but assured Ukraine that security and weaponry they need to try to end the war with Russia.
Meantime, China's central bank has slapped Alibaba affiliate Ant Group with a $985 million fine. The PBOC has said that the fine is in response to violations of various laws and regulations, including corporate governance, consumer protection, and anti-money laundering requirements. According to the migrant aid group Walking Borders, at least 300 people who were traveling on 3 migrant boats from Senegal to Spain's Canary Islands have disappeared. They have been missing for 15 days since they left Senegal to try to reach Spain. Back home today, the Supreme Court will take up Delhi government's plea against centre's ordinance over control of administrative services in the national capital. Delhi government in its plea had called the centre's ordinance an unconstitutional exercise of the executive.